So you're really trying to get a better grip on all the twists and turns of global trade, huh? Especially how all this is shaking things up for a big player like India.
Yeah, it can be a real headache keeping up with everything.
It feels like you're drowning in an ocean of news
That's
sometimes.
exactly why we're doing this deep dive.
We want to cut through all that noise and really zero in on the stuff that
Get
matters.
right to the heart of it.
Exactly. And today we're going to take a good hard look at how those tariffs from back in the Trump years have been affecting the Indian economy.
And the ripple effects those have had on the bigger picture of global trade, too.
Absolutely.
We're going to mainly be focusing on everything leading up to and including that big blanket tariff that hit in 2025.
Yeah, that 26% tariff that everyone's been talking about.
Right, and we've got a whole bunch of research and analysis to dive into
Looking at this from different angles.
across different sectors of the economy.
Okay, so what we're really aiming for here is to give you a solid understanding of how these tariffs have kind of reshaped India's economic playing field.
It's exactly
You want to pinpoint not just the obvious challenges that have popped up,
right.
but also any surprising opportunities that might have come out of this whole thing.
Oh, yeah. Those are always interesting.
And then we're going to zoom out a bit
Take a broader view.
and think about what this all means for global trade in general.
Right, the implications for everyone.
Because it's all connected, right?
It really is.
Okay, so to kick things off, let's rewind a bit and look at the big picture of trade policies that were coming out of the Trump administration back then.
Yeah, let's set the stage.
What really stands out to me is that fundamental shift in their approach.
Right, a big change in direction.
Moving away from that idea of multilateralism.
Where everyone's kind of working together on trade agreements.
Right, towards a much more unilateral,
One-sided.
protectionist stance.
Yeah, America first, right.
Exactly, where tariffs became like their go-to tool.
Their weapon of choice.
Exactly, and it wasn't just random, right?
Not at all.
They had their reasons.
Specific goals in mind.
And they even tried to justify it legally.
Using things like national security concerns.
Right, and that whole thing with Section 301 of the Trade Act.
Oh, yeah.
What
Section
began-
301, that's a powerful tool.
So for those who aren't familiar with the ins and outs of trade law,
Right.
can you give us a quick breakdown of what Section 301 actually is?
Of course. So
Yeah.
Section 301 basically allows the U.S. to investigate and, if they think it's necessary, actually impose tariffs on countries that they believe are engaging in unfair trade practices.
So it's like a way for them to say, hey, you're not playing fair.
Right.
We're going to hit you with some tariffs to even things out.
Exactly. A way to protect American businesses and industries.
And of course, India ended up right in the crosshair.
Yeah, they definitely came under scrutiny.
If we zoom out a bit and look at the bigger picture,
The global context.
the U.S. had a pretty massive trade deficit with India,
A lot more imports from India than exports to India.
reaching a peak of something like $24 billion back in 2018.
Yeah, a significant imbalance.
And there was also this perception in Washington that India was playing its own protectionist games, with high tariffs on goods coming from America and all sorts of complicated regulations,
A lot of red tape.
which led to accusations that India was being protectionist too.
Both sides pointing fingers.
It was like a trade war brewing.
A battle of tariffs.
And that brings us to the first big move, right?
The opening salvo.
Revoking India's special trade status.
You're talking about the Generalized System of Preferences, or GSP.
Exactly. GSP back in 2019.
Yeah, that was a major development.
That had to have had a real impact.
It did. It was a big deal for Indian exporters.
So can you remind us what GSP actually is?
Sure. So the GSP is basically a program that gives certain goods from developing countries,
Like India.
right? A free pass to enter the U.S. market duty-free.
No tariffs.
No tariffs, which makes their products more competitive.
And when India lost its GSP status,
Suddenly, they had to pay tariffs on over $5.6 billion worth of exports.
wow, that's a lot of money.
It's a huge chunk of their trade that suddenly became more expensive.
And that must hit some key industries pretty hard.
Oh, yeah, certain sectors felt it immediately.
But India didn't just sit back and take it, did they?
No, they didn't. They fought back.
I remember reading about them putting retaliatory tariffs on some pretty iconic American products.
They sure did,
Things like almonds, apples.
making them more expensive for American consumers.
Which must have ruffled some feathers in the U.S.
It definitely got their attention.
So they slapped tariffs on 28 U.S. products.
It was the clear message that they weren't going to just roll over.
They were ready to play hardball.
They were in it for the long haul.
And as we all know, things escalated even further in 2025.
Yeah, that's when things got really serious.
That's when we saw what the sources call a more aggressive posture.
Right, taking it up a notch.
Culminating in that sweeping 26% tariff on a whole bunch of Indian imports.
The big hammer.
And this time, the justification was reciprocity.
Basically saying, hey, India, you got all these trade barriers in place.
We're going to do the same to you.
Leveling the playing field.
Yeah.
Or at least that was the argument.
And that's when the pressure really started to mount.
Yeah, things got intense.
Well, the exact financial hit from that 26% tariff would vary depending on the specific industry.
Right, different sectors, different impacts.
The overall effect had to have been massive.
Oh, it was a big blow, no doubt.
And what's really fascinating to me isn't just the direct increase in costs.
Right.
But also the psychological impact on Indian exporters.
The uncertainty, the fear of the unknown.
They were already dealing with a pretty chaotic global landscape.
Yeah, the world was still recovering from the pandemic.
They were facing tougher competition from Southeast Asian countries.
Who were often offering lower prices.
And now they had this huge new layer of uncertainty and expense to contend with.
It was like a punch to the gut.
Had to be demoralizing.
Absolutely a real test of resilience.
So how did they deal with it?
How did they cope with these new tariffs?
Did they just suck it up and absorb the higher costs?
Some did, some didn't.
There had to have been some pushback.
Oh yeah, they got creative.
What kind of strategies did they come up with?
Well, a lot of exporters started looking for new markets.
Places where the tariffs didn't apply.
Right. Exploring opportunities in Europe,
Yeah.
the Middle East, Africa.
Diversifying their customer base.
Spreading the risk.
Makes sense.
Don't put all your eggs in one basket.
And wasn't there also a big increase in lobbying efforts?
Oh yeah, absolutely.
Indian companies trying to make their case directly to Washington?
They hired lobbyists. They made campaign contributions. They did whatever they could to get the attention of lawmakers.
Trying to get some exemptions from the tariffs?
Or at least some better trade terms.
Playing the political game.
It's all part of the process.
And one thing that really struck me in the research was this weird contradiction.
Oh yeah, that's interesting, isn't it?
On the one hand, India was in a prime position to benefit from all these companies trying to move their supply chains out of China.
That whole de-risking trend.
Right, but then you've got this really aggressive trade stance from the U.S.
Making India look like maybe not such a stable option after all.
Yeah, it kind of throws a wrench in the whole de-risking strategy, doesn't it?
It really does. It's a real dilemma for companies trying to figure out where to go.
Because if you're looking for a stable, reliable alternative to China...
You don't want to jump into another trade war.
Right.
So it really puts India in a tough spot.
Caught in the crossfire.
Absolutely.
So that gives us a good overview of the tariffs themselves.
The policy side of things.
And the disruption they cause to global trade.
Yeah, the big picture.
Now let's zoom in a bit.
Okay, let's get specific.
And see how specific sectors of the Indian economy were affected.
Let's break it down.
One of the biggest players in India's economy is IT servicers, right?
Absolutely huge industry, massive global presence.
With major companies like TCS, Infosys, Wipro, HCL Technologies.
Some of the biggest names in tech.
And they earn a ton of money from exports.
Billions and billions of dollars.
And North America is their biggest market.
Over 60% of their exports went to North America in 2023.
So even though the tariffs weren't directly applied to IT services?
Right, because most of what they do is intangible.
It's not like shipping physical goods.
It's software.
Yeah.
It's consulting. It's cloud services.
They still felt the ripple effects, right?
Oh yeah, they definitely felt the impact.
It's like a chain reaction.
One thing leads to another.
So how did that indirect impact actually play out?
Well, it's all about economic uncertainty.
When businesses get nervous, they tighten their belts.
And they start cutting costs.
And one of the first things to go is often IT spending.
It's seen as a discretionary expense.
Something you can put off if you have to.
Right, whereas things like rent and salaries, those are non-negotiables.
So when the U.S. economy started to slow down...
Due to all the trade tensions.
The big clients of these Indian IT companies...
Companies in manufacturing, retail, automotive, financial services.
They all got more cautious.
They started scrutinizing their budgets.
And they pulled back on IT projects.
New initiatives were put on hold.
Existing contracts were renegotiated.
Or not renewed at all.
Deal cycles got longer.
It took longer to close deals.
And the value of those deals shrunk.
Less money coming in.
And this was happening even though the need for these IT services was still there.
Right, the demand was still strong.
Companies still needed to migrate to the cloud.
They still needed cybersecurity.
But they were hesitant to make big, long-term commitments.
It was too risky in such an uncertain environment.
And on top of all that, there was that resurgence of the whole outsourcing debate in the U.S.
Yeah, that came back with a vengeance.
Which must created a lot of anxiety for Indian IT firms.
It definitely put them on edge.
Because now you've got this America First rhetoric.
Bring those jobs back home.
And even though there weren't any specific new laws targeting outsourcing,
Right.
it created a lot of negative PR.
A real reputational risk.
Some U.S. clients might have felt pressured to bring their IT operations back home,
To onshore instead of offshore.
which would force Indian companies to set up shop in the U.S.,
And that's expensive.
higher operating costs.
Less profit.
So it was a tough time to be an Indian IT company.
No doubt about it.
But it wasn't all doom and gloom, was it?
No. There were some bright spots.
The sources mentioned some potential silver linings?
Some unexpected benefits.
What were those?
Well, one interesting thing was that the same logic that was driving companies to diversify their hardware supply chains away from China
Right.
was also starting to apply to software and digital services.
So they were looking for alternatives to China in the tech world, too.
Exactly.
And that created some opportunities for Indian firms.
Especially those that had already invested in setting up delivery centers in the U.S.
So they were already on American soil,
They had a local presence.
which made them more attractive to some U.S. clients,
They were seen as a safer bet,
especially for government contracts and industry-specific deals,
particularly in sensitive areas like healthcare and federal services.
where security is paramount.
Absolutely.
And there were also growing concerns about cybersecurity.
And the possibility of Chinese tech companies spying on U.S. companies.
So some U.S. companies started to view Indian firms as more trustworthy.
More neutral, less likely to be influenced by the Chinese government.
So there was this geopolitical angle at play.
A subtle but significant factor.
So it was a mixed bag for the IT sector.
Ups and downs.
But overall, it probably slowed down their growth.
Yeah, they had been on a tear for years,
But those days might be over.
at least for now.
We could see more cautious hiring practices,
Fewer jobs for fresh graduates.
less investment in startups.
A more subdued stock market performance.
And the sources really emphasize one key vulnerability:
What's that?
their over-reliance on the North American market.
Yeah, they've got too many eggs in one basket.
And with the U.S. economy potentially heading into a recession,
And AI disrupting everything.
the future for Indian IT is looking a little shaky.
They're going to have to adapt.
Diversify their markets.
Find new sources of revenue.
It's a whole new ballgame.
It's a brave new world.
Okay, so we've covered IT.
A complex picture.
Now let's move on to another giant in the Indian economy:
Pharmaceuticals.
the pharmacy of the developing world.
Yeah, India is a major player in the global pharma market.
How did they fare under the Trump tariffs?
This is where things get really interesting.
Okay, I'm intrigued.
Because the Indian pharmaceutical industry actually turned out to be surprisingly resilient.
Really?
They weathered the storm better than a lot of people expected.
So they're a major global supplier of generic drugs,
And active pharmaceutical ingredients, or APIs.
which are the key components that make drugs effective.
The stuff that actually makes you better.
Right, and they export a ton of pharmaceuticals to the U.S.
Over $9 billion worth every year.
Wow, that's huge.
And they play a vital role in the American healthcare system,
By providing affordable medications,
keeping drug prices down for millions of Americans.
which is a big deal in a country where healthcare costs are through the roof.
It's a major political issue.
And that gives India some leverage in trade negotiations,
Absolutely.
because the U.S. needs those affordable drugs.
They can't afford to shut out Indian pharma companies.
So here's the kicker.
The big twist.
Despite all the tariffs that were imposed in 2025,
The blanket. 26% tariff.
pharmaceuticals from India were exempted.
They get a free pass.
That's a huge decision.
A major concession.
So why did they do that?
Why were Indian pharmaceuticals spared?
It all comes down to U.S. domestic politics and public health.
Two very powerful forces.
Rising healthcare costs are a constant headache for American politicians.
Voters are always complaining about it.
And they see Indian generics as a way to keep those costs in check.
A way to make healthcare more affordable.
So they couldn't afford to alienate India.
They needed to keep those drugs flowing.
So that must have been a huge relief for the big Indian pharmaceutical companies.
Oh yeah, they dodged a bullet.
They had invested heavily in the U.S. market.
They built up a strong presence.
And they were heavily reliant on FDA approval.
Which is the gold standard for drug regulation globally.
So losing access to the U.S. market would have been devastating.
It would have been a major setback.
But even though they got that tariff exemption,
Right.
they weren't completely out of the woods, were they?
No. They still face some challenges.
The sources mention some indirect headwinds.
Some bumps in the road.
What were those?
Well, for one thing, the FDA started scrutinizing their manufacturing practices more closely. They were under the microscope,
There were concerns about data integrity.
making sure their clinical trials were up to par.
And some manufacturing facilities were even banned from exporting to the U.S.
That's a big deal.
And then there were the economic factors,
Like the depreciation of the Indian rupee
which made their exports more expensive,
and the rising costs of raw materials.
especially APIs, which they often source from China.
And let's not forget about the global shipping crisis, which disrupted supply chains and drove up transportation costs.
So it was a tough environment even without the tariffs.
A lot of obstacles to overcome.
And then there was that push in the U.S. to bring more critical medicine production back home,
The onshoring initiative.
which was mainly aimed at reducing dependence on China.
Right.
But it also raised some questions about India.
What if India became the next China?
What if the U.S. became too reliant on India for essential medicines?
That's a risk they didn't want to take.
So some Indian pharma companies started exploring joint ventures and acquisitions in the U.S.
A way to hedge their bets
to get a foothold in the U.S. market.
and to reduce their exposure to potential future protectionist measures,
It's like they were trying to get ahead of the curve.
anticipating future challenges.
And didn't the pandemic actually boost India's reputation in the pharma world?
It definitely did.
They played a big role in global vaccine production and distribution,
That whole vaccine diplomacy effort.
which earned them a lot of goodwill internationally.
They were seen as a valuable partner,
A reliable supplier of essential medicines.
a force for good in global health,
And the Indian government also stepped up its support for the pharma industry,
with initiatives like the Production-Linked Incentive Scheme, or PLI,
which aims to boost local manufacturing of APIs.
and reduce their reliance on imports from China.
So they were trying to become more self-sufficient.
More independent, less vulnerable to external shocks.
So the pharma sector seems to have come through all this relatively unscathed,
They navigated the choppy waters pretty well.
largely because of their strategic importance.
The world needs their medicines.
But the sources do end with a word of caution, don't they?
They do.
What is it?
They say that even though the Indian pharmaceutical industry has been resilient, they can't afford to get complacent.
Right.
They need to stay focused on quality control, making sure their products meet the highest standards.
Absolutely.
They need to secure their supply chains, make sure they have multiple sources for their raw materials.
So they're not dependent on any one country.
Exactly.
And they need to maintain a strong global presence.
Keep building relationships with partners all over the world.
So they're not overly reliant on any one market.
Right.
Because things can change quickly in global trade.
You always have to be prepared for the unexpected.
And they specifically mention that there's always the possibility of future tariff actions.
From President Trump or whoever comes after him,
So they can't let their guard down.
they have to stay vigilant.
It's a never-ending battle.
The struggle is real.
Okay, so to wrap things up,
Let's summarize what we've learned.
it's been a pretty wild ride.
A lot of twists and turns.
The Trump-era tariffs didn't have a uniform impact on India.
Some sectors got hit harder than others,
IT faced some serious indirect challenges.
while pharmaceuticals actually showed some surprising strength and resilience. They were the unexpected winners,
We saw some vulnerabilities exposed,
especially in IT's heavy reliance on the North American market.
but we also saw unexpected resilience and even strategic advantages in certain sectors,
Like pharmaceuticals.
which just goes to show how complex and unpredictable global trade can be.
It's a delicate ecosystem.
So after going through all this research,
And analyzing all the data,
what are the key takeaways for countries like India as they try to navigate this increasingly protectionist global landscape?
it's a tough question.
What have we learned?
Well, I think one of the biggest lessons is the importance of diversification.
Not putting all your eggs in one basket.
Spreading your risk across multiple markets.
So you're not so vulnerable to shocks in any one country.
Exactly.
And it also highlights the need to strengthen domestic manufacturing capabilities.
So you're less reliant on imports
More self-sufficient.
More in control of your own destiny.
And maybe even forging stronger trade alliances with a wider range of partners.
Building a network of like-minded countries.
Who believe in free and fair trade.
Right.
So you're not so isolated.
Not so dependent on any one superpower.
Because the global economy is so interconnected.
It's a tangled web.
And when one country throws a wrench into the system,
it can have ripple effects all over the world.
And those effects can be unpredictable.
Sometimes positive, sometimes negative.
But always significant.
Always worth paying attention to.
So it's food for thought.
A lot to ponder.
As we move forward in this uncertain world.
The only certainty is uncertainty.
Thanks for joining us.
It's been a pleasure.
And keep exploring.
The world of global trade.
It's a fascinating subject.
And it affects all of us.
So stay informed.
And stay engaged.
And until next time.
Happy trading.
Bye for now.
See you later. We often talk about these big global events, and we think, oh yeah, we get it. We understand the impact. But the reality is it's usually way more complicated than that.
Right, yeah.
Like we were looking into all the fallout from those Trump-era tariffs back in 2025, and everyone was saying, oh, watch out, the pharmaceutical industry is going to get slammed. But you know what?
Yeah.
It's actually the gems and jewelry industry in India, a huge exporter, maybe not the first one you think of, that's facing this really, really dramatic shift, and it's fascinating.
It really is.
So today, we're going a deep dive into how these tariffs are impacting 4 big sectors in India: gems and jewelry, agriculture, electronics, and hardware, and automobile components. And we'll even touch on textiles a little bit.
Absolutely. And it's amazing the amount of information that's out there. We've been going through tons of reports, all analyzing the immediate impact, right after these tariffs hit, and then the potential long-term consequences cause these things have ripple effects.
You really do.
So we're talking about tariff hikes that went into effect. Well, they started in April 2025.
Okay.
And our goal today really is to take all that complexity, cut through it, and give you the core insights. How are these shifts in global trade actually hitting a major economy like India, a country that's really on the rise?
Yeah.
We're going to focus on those key takeaways, the aha moments, the things that really give you that clear understanding.
Okay, I'm ready to dive in. Let's start with gems and jewelry, because this isn't just about, fancy necklaces and rings. This is a huge part of India's economy.
It really is. It's a cornerstone, employs millions of people.
Wow.
And a big chunk of their business depends on the U.S., which buys like 40% of their exports. So you can imagine that dependence makes them super vulnerable when these tariffs come into play.
So when that 26% tariff hit in April 2025, what happened? I mean, immediately, what did that look like?
It was a huge blow. Unlike some industries, that maybe have some political leverage, gems and jewelry, they were seen as luxury goods. Basically fair game, the thinking. Protect American jobs, these are just luxury items. So it wasn't like a little nudge up. This was a huge jump. It went into effect April 9th, 2025, and the impact was pretty much instant.
So for the Indian businesses that are actually doing the exporting, what did this look like for them on the ground?
It was total disruption. Contracts that they had in place, suddenly everything's up in the air, renegotiations, cancellations left and right. And then you have U.S. retailers, right? They're looking at these higher import costs now, so they start hunting for alternatives.
It makes sense.
Some are looking domestically, maybe they can find something here. Others are looking at countries like Thailand, Turkey, places where maybe they can get a better deal. But the ones who really got hit hard, small and medium businesses. They're the backbone of this sector in India. And they're the most vulnerable to things like, furloughs, delays in shipments, having to cut back on production.
Oh, yeah.
Just imagine the diamond industry in Surat. I mean, they handle almost all the world's diamonds, something like 90%, and suddenly orders are drying up.
Yeah, that's got to be devastating.
Yeah.
Beyond the money, though, what about India's reputation in this market? They're known for quality, right?
That's a great point. India has worked so hard for decades to build a reputation for excellence in this industry.
Yeah.
Beautiful gemstones, reliable, high-quality craftsmanship. And this tariff really challenged that. And it wasn't because India's quality slipped or anything. It was just pure geopolitics getting in the way. And I think there was this sense in India of being blindsided, like, hey, we've been partners for so long. We're so interconnected. You guys don't appreciate the complexity of these supply chains, the skills, the generations of knowledge we bring to this.
Right.
It's not that simple.
So with this sector being so important to India, was there anything the government could have done, to push back harder against these tariffs?
Well, they definitely tried. There were lobbying efforts, working through different channels, trying to make their case. But in the short term, getting the tariffs reduced, it just proved really difficult.
Yeah.
The U.S. was in the middle of these broader trade talks with India, but the administration was pretty firm on these tariffs. And on the other side, India was really hesitant to offer big concessions in return, especially when it came to things like gold import duties, messing with that could really upset things back home.
Yeah, I see. So if getting the tariffs lowered was off the table, how are these exporters in India trying to survive? What are they doing?
It's all about adaptation.
Yeah.
We're seeing a big push to diversify, not putting all their eggs in the U.S. basket anymore. They're looking at places like the UAE, Hong Kong, the EU, and that India-UAE trade agreement, the SIA, that's becoming a lifeline for them. It offers some tariff breaks. And then you have this growing trend of going direct to consumer, especially online, reaching out to the Indian diaspora worldwide. That's a huge market. But the reality is the damage in the U.S. market is done. Major brands that used to depend on India, they're already looking at other places to build more stable supply chains. And this uncertainty is even making people hesitant to invest back in India.
Oh, wow.
So it's a tough situation.
Yeah, this has really forced the industry to rethink everything.
Right, absolutely. It's sparked all these discussions about long-term structural changes. Like, okay, how do we add more value to the raw materials within India so we're not just exporting the raw stuff? How do we get super strict about traceability so we can prove ethical sourcing, really build consumer trust? And how do we create global brands for Indian jewelry that stand on their own?
Interesting.
Some people are even talking about vertical integration, like how De Beers or Tiffany do it. They control more of the supply chain from start to finish. That way, you're less vulnerable to these external shocks. The big lesson here is that when you're exporting something that's non-strategic, something that's seen as a luxury, you are exposed to these geopolitical winds.
Yeah, I see that.
So India's got to adapt, become more diplomatic, more diversified, and really rethink this whole dependence on one market.
Okay, makes sense. Now let's switch gears completely, go from diamonds to farms. You said agriculture wasn't really directly hit by these 2025 tariffs. What's going on there?
Well, agriculture in India is a really sensitive topic. You're talking about millions of livelihoods, a huge part of the economy. And when you look at their export earnings, a lot of it comes from things like rice, tea, spices, seafood, cotton, all these agricultural products.
Yeah.
And initially, many of those key exports, they were actually exempt from the tariffs. But the thing is, trade friction, it's like a ripple effect. It creates this whole mix of challenges and some unexpected opportunities.
Okay.
It's complex.
Which agricultural products are we talking about here? The ones that are really key to India's trade with the U.S.?
Well, seafood is huge, and basmati rice.
Oh, yeah. I love basmati rice.
In India, states like Kerala, Andhra Pradesh, they're major hubs for seafood exports to the U.S., and the U.S. just keeps importing Indian shrimp, a lot of it. The demand has stayed pretty steady, even though prices have gone up, and there's all these logistical headaches now.
Right.
And then basmati rice, it's kind of in a category of its own. India pretty much dominates that market, partly because the Indian diaspora, they just love it. They grew up with it, and it has this unique aroma, this texture. It's hard to replicate elsewhere.
Yeah, it's special. Now, you mentioned non-tariff barriers, which sounds a bit strange. What exactly are those, and how are they affecting Indian agriculture?
So even if a product isn't directly taxed, there's no tariff on it, when there's this kind of trade tension, it often leads to more scrutiny at the border. So for Indian agricultural goods coming into the U.S., they might face longer wait times at the ports, more inspections, stricter quality checks, phytosanitary regulations, making sure there's no pests or diseases. And all of that, it adds up. It increases costs for the exporter. It makes things more complicated. And sometimes perishable goods, they just spoil while they're waiting to be cleared. And it's often the smaller exporters who get hit hardest because they might not have the resources to navigate all these new hurdles.
Oh, yeah, I see. It's like a hidden cost, right?
Yeah.
So on the one hand, some doors are closing or they're getting harder to open. But are there any new doors opening for Indian agriculture because of these global shifts, with the U.S. and China kind of pulling apart?
Yeah, that's the interesting part. There's definitely potential there. Like, the U.S. is buying a lot less stuff from China now, things like soybeans, garlic, certain processed foods. And that opens up space for other countries, including India.
Makes sense.
Now, realistically, India's not going to replace China overnight. China's just massive.
Right.
But we are seeing more inquiries from U.S. importers. They're looking to diversify their suppliers, and that's good news for India.
Okay. So why isn't India, just jumping on this opportunity with both feet. What's holding them back?
Well, there are some serious structural issues in Indian agriculture that are hard to overcome quickly. You have all these fragmented land holdings, so it's hard to scale up production to get that efficiency that big buyers want. Supply chains are often inconsistent. The cold storage infrastructure is lacking, so a lot of produce ends up spoiling before it can even reach the market.
Right.
And then there's the issue of quality standards. They can be all over the place.
Oh, yeah.
Plus, prices are really volatile, depending on the monsoons and input costs. So it's hard for Indian exporters to offer that kind of consistency and reliability that international buyers demand.
Makes sense. And I can imagine the Indian government has to be really careful here, with the farmers and all the protests they've had.
Absolutely. Agriculture is incredibly sensitive politically in India, and the government knows it. They're walking a tightrope, trying to promote exports, but also make sure there's enough food for everyone at home. So they're hesitant to make any concessions to the U.S. that might benefit exporters, but could potentially upset the farmers.
Makes sense.
Especially when it comes to things like dairy or wheat. Those are super sensitive.
Yeah.
And there's this whole debate about subsidies and minimum support prices for crops. All that's tied up in it. So it's a complex landscape.
Yeah, I can imagine. So what's the way forward for Indian agriculture, given all this, with global trade changing so rapidly?
It's a good question. This whole situation really underscores the need for some serious reforms in Indian agriculture.
Okay.
Like, we need to encourage more farmer-producer organizations, these FPOs. They can help farmers band together and connect directly with international markets.
Makes sense.
Huge investments in cold storage, improving logistics, that's crucial to reduce those post-harvest losses. And it just makes Indian produce more competitive. And this could be part of a bigger strategy, to integrate Indian agriculture into those global value chains, but in a way that also protects food security and supports rural employment.
Okay, yeah, that's a whole other discussion. Now, let's move on to electronics and hardware. This is a sector that's been booming in India, right? But it sounds like they're in a really tough spot.
Yeah, they're kind of stuck between a rock and a hard place, On one hand, you have all this potential from the U.S.-China trade war, that decoupling. But on the other hand, there's that 26% tariff on Indian electronics that hit in April 2025, and that's a real blow. It's a sector with a lot of potential, but they're still relatively new to being a major exporter on the global stage.
So, remind us, what's been the growth trajectory of this sector in India? How did they get to where they are?
Well, for a long time, India was mainly a consumer of electronics, not really making much themselves. But then the government launched these big initiatives, things like Make in India, that's all about boosting domestic manufacturing. And then you have the PLI schemes, the production-linked incentive schemes, that offer financial incentives to companies that manufacture in India.
Oh, okay.
So we're starting to see a shift, and it's attracting some of the big global players like Foxconn, Pegatron, even Samsung. They're setting up factories, particularly in states like Tamil Nadu, Karnataka. And that's led to this huge increase in electronics exports, like more than double in just a few years.
Wow, that's impressive. And the U.S. was becoming a really important market for all these exports, right?
Huge market. The U.S. was buying all sorts of stuff, consumer electronics, chargers, those little LED lights, IT hardware. And there was this hope in India that, okay, as the U.S. pulls back from China, we can step in and fill that gap. But then this blanket 26% tariff on Indian electronics, even though China's tariffs are even higher, it really messed things up.
So even if India can make some things cheaper than China, that tariff wipes out their advantage.
Yeah, pretty much. Now, U.S. importers are looking at it and thinking, okay, do I pay a really high tariff for Chinese goods, or do I pay a slightly lower but still significant tariff for Indian goods? It's not an easy choice. And for many companies, it's just not enough of an incentive to upend their supply chains to go through all that hassle and expense. So some are taking a wait-and-see approach, hoping things will change. Others are looking at other countries with better trade deals like Australia, New Zealand, even some parts of Southeast Asia, Latin America, places where the tariffs are lower.
Oh, interesting.
And in India, there's a lot of worry that they're going to lose out to these other countries.
So how are the electronics companies in India dealing with all this? What are their options?
It's a mixed bag. You have the bigger companies, the ones with operations all over the world. They might consider geosourcing, meaning they'll just shift production to a country that has a better trade deal with the U.S.
Smart.
But for the smaller manufacturers, the ones that make up a big part of the sector, it's a lot harder. They don't have the capital to just move things around like that, and they're stuck. So some are cutting back on production, laying off workers, focusing more on the domestic market in India. It's a tough situation.
Yeah, I see. So what's the Indian government doing to help? I mean, policy-wise.
It seems like they're going to try a two-pronged approach.
Okay.
One is diplomacy, trying to get the U.S. to make exceptions for certain electronics products, or maybe negotiate a more targeted trade deal where they say, look, penalizing us just makes it harder to build a more diverse, resilient global supply chain. But realistically, they know it's going to be hard to get immediate relief that way. So the other thing they're doing is doubling down on domestic reforms. This means giving even more incentives to companies that manufacture electronic components in India, not just assembling the final products. They're talking about a big push for the semiconductor industry, providing subsidies, building infrastructure.
Yeah.
They might even repurpose some of those special economic zones and turn them into electronics export hubs, and they'll try to streamline customs procedures to make things easier. It's a lot of moving parts.
Yeah, it sounds like it. So looking ahead, what's the long-term outlook for this sector in India, given all this global uncertainty?
It's hard to say for sure, but despite all the headwinds, India's position globally should improve over time, even if it's gradual. Some companies are just so wary of China now that they're willing to give India a try, even if it's on a smaller scale. And Indian contract manufacturers, they have a real chance to move up the value chain. Instead of just assembling things, they can start offering design services, prototyping, things where cost isn't the only factor. And there are some really interesting higher margin segments opening up, like medical devices, aerospace electronics, where India could really excel.
Okay. But it sounds like the main lesson here is that even a sector that's growing this fast, they're still vulnerable to these sudden shifts in policy, right?
Exactly. The whole tariff situation has exposed this truth. India's electronics industry, yeah, it's got huge potential, but they need to get bigger, more resilient.
Right.
They need to be less dependent on other countries for components, diversify their markets, and build strong partnerships around the world that are based on more than just, being the cheapest option.
Okay, that makes a lot of sense. Yeah. All right, now let's shift gears again and look at another sector that often gets overlooked, but it's a really big exporter for India. Automobile components.
Yeah, it's kind of a quiet giant. This industry has been steadily growing, and in 2024, they exported over $19 billion worth of parts, supplying everyone from Ford and GM to Volkswagen and Toyota.
Wow.
And the U.S. is a huge customer for them, especially for things like engine components, braking systems, transmission parts, all the important stuff.
So they got hit with a tariff, too, in 2025.
They did, 25%. And it came at a really bad time because the industry was still recovering from all the disruptions of the pandemic, trying to get back on their feet.
Oh, man.
Now, the U.S. wasn't specifically targeting India with this tariff. It was more about bringing manufacturing back to the U.S. and reducing their dependence on China. But Indian suppliers, they got caught in the crossfire.
Oof. So what did that tariff mean for these Indian companies, the ones making car parts?
Well, it made their products more expensive in the U.S., which meant they weren't as competitive anymore. So American car companies started to rethink their suppliers. Some looked at Mexico because of that USMCA trade agreement. It's cheaper to import from there.
Mm-hmm.
Others thought about sourcing closer to home, even if it cost more. And the result was new orders slowed down, contract negotiations stalled.
Oh, yeah.
Now, the bigger Indian companies, the ones that had factories in other parts of the world, they had a bit more flexibility. They could shift some production.
Mm-hmm.
But the smaller companies, they were really squeezed. Their profit margins were shrinking, orders were drying up. It was a real struggle.
This must have forced the Indian auto components industry to really take a hard look at themselves.
Right.
Strategically.
It was a wake-up call, that's for sure. They had been relying so heavily on the U.S. market, and suddenly it was this huge vulnerability. So they started exploring other options, looking at places like Southeast Asia, the ASEAN region, especially for electric vehicle supply chains, which are really taking off there. Europe is another option because their tariff situation is more stable.
Right.
And of course, there's the domestic Indian market, which is growing, but it can't make up for all the lost business from the U.S. So it's a diversification strategy.
Okay, so what did the Indian government do to help? Did they offer any support to this sector?
There are a few things they could do, like offering export credit guarantees. That helps companies get financing. And they could expand some of those Atmanirbhar Bharat schemes. Those are initiatives to promote self-reliance and tailor them to support auto component manufacturers. But those are really just Band-Aids,
Yeah.
short-term fixes. What they really need is a long-term vision, a plan to help this sector become more high-tech, to move up the value chain. They need to position themselves as key suppliers for electric vehicles, autonomous vehicles. That's the future.
So what would that kind of long-term vision look like, practically speaking?
Well, they could start by forging partnerships with global auto tech companies, the ones who are really innovating.
Hmm.
And instead of just churning out tons of low value parts, they need to focus on the more advanced stuff, things like battery management systems, those are in huge demand, and advanced driver assistance systems, the ADAS systems.
Yeah.
They need to invest more in research and development, maybe explore joint ventures to develop their own proprietary technologies. The goal is to become indispensable, to be the go-to source for the stuff that everyone needs.
Makes sense. So it's a tough situation, but it sounds like there's potential for this sector to come out stronger in the long run, if they can adapt. Okay, now, one last sector we wanted to touch on, and this one's a bit surprising because it seems like those Trump tariffs might actually be helping India in this area. Textiles?
Yeah, this one's a real head scratcher at first glance.
It is.
So the U.S. slapped a 26% tariff on Indian textiles, which sounds bad, right?
Yeah.
But here's the thing. The tariffs on India's main competitors are way higher. China's got a 54% tariff, Bangladesh 37%, Vietnam 46%.
Wow.
So all of a sudden, Indian textiles look really competitive in the U.S. market, especially for those everyday clothes, the mid-range mass market stuff.
So this tariff that was supposed to punish India, it's actually giving them an edge.
It's crazy, right? U.S. buyers, they're looking at those tariffs and they're thinking, we got to find another source. So Indian manufacturers, especially in places like Tamil Nadu, Gujarat, they're getting flooded with inquiries. They're signing new contracts.
Yep.
And this is all happening alongside that China plus one strategy that everyone's talking about.
Right.
Companies want to diversify their supply chains so they're not so reliant on China anymore, and India is perfectly positioned to benefit from that.
This is a total turn of events. But are there any roadblocks, anything preventing India from really making the most of this?
Well, there are some structural issues they need to address. A lot of factories still have outdated machinery, which makes them less efficient. Power tariffs are high in India, which adds to production costs. And the labor laws can be a bit rigid, which makes it harder to be flexible and respond to changes in demand. Plus, they still have to compete with some countries that have duty-free access to the U.S. market, even if those deals are getting smaller. And then there are those non-tariff barriers. U.S. buyers are really demanding when it comes to quality, sustainability, ethical labor practices. So India has to step up their game there.
Okay, so if India wants to really seize this opportunity, what do they need to do?
The government has to play a big role here. They need to support policies that make the textile industry more efficient and more competitive globally. That could mean expanding those textile parks, modernizing them, making it easier for companies to comply with labor regulations, giving incentives for green and sustainable practices. And they really need to improve the logistics, container transport, port facilities, all that stuff.
Right.
If they can get that right, this tariff situation could really transform India's textile industry. But here's the catch. This advantage might not last forever. If countries like Vietnam get their own zero-tariff trade deals with the U.S., then the playing field changes again.
Oh, wow. Okay, so we've covered a lot of ground here, a lot of different sectors. It's amazing how these global trade policies, they can have such a wide range of effects, some of them totally unexpected. So as we wrap up this deep dive, what are the big takeaways from all this, the impact of those 2025 U.S. tariffs on India?
It's been fascinating to see how diverse the impacts have been, right? You've got gems and jewelry, auto components. They're facing some really tough challenges. Agriculture and electronics, it's more mixed. And then textiles, they're actually benefiting.
Yeah, it's wild. And when you look at all of these different stories, are there any common themes that emerge?
Absolutely. I think the biggest one is just how vulnerable economies are and specific industries within those economies to these geopolitical shifts and trade policy changes. It's a globalized world, but that means you're exposed to these winds of change.
Yeah.
And that leads to the second big takeaway, which is the importance of adaptation, being nimble, being able to diversify your markets, your products, so you're not so reliant on just one thing. And then, of course, you need both proactive government policies and innovation at the industry level to really navigate these turbulent waters. It takes a village, as they say.
So for our listeners, what's the key message here? The thing they should really take away from all this.
That even something that seems straightforward, like a trade policy, can have all these ripple effects. It creates winners and losers. It forces businesses and whole economies to rethink everything. And it just highlights how interconnected our world is.
Absolutely. And I think that leads to a really interesting question, something to ponder.
Yeah.
When you look at all these examples, what does it tell us about the future of global supply chains? Where are they headed? And what about the future of international trade in general? In a world where everyone seems to be putting up walls, what role will countries like India play in all this? It's something to think about, and it just shows how one policy in one part of the world can have these unintended consequences everywhere.
It's definitely food for thought. Thanks for having me on to discuss this.
Oh, thanks for being here. This was great.
Okay, so today we're going to dive into some pretty choppy waters.
Yeah.
In the world of global trade.
Definitely.
It's all about those Trump-era tariffs.
Right.
A whole 26%.
Huge.
Yeah, just slapped onto a bunch of Indian exports.
Yeah.
Now, I know you're all here because you want to really get this.
Let's go.
Cut through the noise and figure out what this actually means.
Right.
Not just the economic theory.
For sure.
But the real-world impact.
Exactly.
So that's what we're going to do.
Yep.
Digging through tons of research.
Oh, yeah.
Macroeconomic analysis from the top think tanks, financial institutions, the big names.
For sure.
All looking at India's trade.
Yeah.
And we've also got a bunch of strategic policy stuff.
That's key.
Really understanding how India is thinking about their whole approach to global trade.
Absolutely.
And we're going to break down what all of this means for India.
Yeah.
Both right now.
Right away.
And in the long run.
Yeah, the long game.
How are these tariffs going to ripple out and affect India's economy and their whole global trade strategy?
Yeah, that's what we're here for.
Exactly. We're aiming for clarity.
Definitely.
And some actionable insights for you all.
Some aha moments for sure.
So yeah, let's unpack all of this.
Let's get into it.
It's kind of interesting to think about the timing of these tariffs, right?
Oh, yeah, absolutely.
Because as our sources point out, it's not exactly a calm moment.
No, not at all.
For the Indian economy, they're already dealing with a lot.
Right.
Bouncing back from the pandemic. Supply chains are still...
Yeah, they're all over the place.
A mess.
Still recovering.
And energy costs are...
Yeah, out of control.
Yeah, going crazy.
It's a lot.
So these tariffs are just another big weight being added to their plate.
Yeah, it's not like a single isolated thing.
No.
It's like this complex balancing act that's already happening.
Exactly.
And then this gets thrown in.
Yeah, and one of the first things we see in our analysis is this projected dip in India's GDP growth for this fiscal year 2025-26.
Yeah.
And it's expected to be somewhere between...
Yeah, around 20 to 40.
20 and 40 basis points.
Yeah, basis points. That's the key.
Which might not sound like much.
Right. At first glance, it's like...
At first glance, it's like...
Yeah. Is that a big deal?
But when we dig deeper into the sources, it's clear that the impact isn't going to be...
Yeah, it's not going to be evenly distributed.
Evenly spread at all.
No.
It's going to be really concentrated.
Yeah, super concentrated.
So think about regions, states, even specific job sectors where exports are their lifeline.
Totally, the bread and butter.
They are going to be hit the hardest.
Oh, yeah. They're bracing for impact.
Yeah, and that concentration is super important to understand.
It is.
Because, we can talk about national averages.
Right. National averages are just a broad stroke.
It's just the big picture.
Yeah.
But the real story is about these microeconomic pressures.
Right. The nitty-gritty.
Yeah, the nitty-gritty that are going to hit the exporters directly.
With people on the ground.
Yeah. So we're talking about things like warehouses filling up.
Yeah, too much inventory.
Yeah.
Demand is slowing down.
Overseas demand is cooling off.
Yeah, less buyers.
And then cash flow problems.
Oh, yeah, big time.
Because payments are being delayed.
Right, from international buyers.
Yeah, because they're dealing with these tariffs.
Exactly. Tariffs mean uncertainty.
And it's just this general sense of
Yeah, anxiety.
Anxiety and unease.
Yeah.
Among all the buyers who are
just trying to figure out what to do.
Trying to navigate this new reality.
Yeah, what does this even mean for us?
And this is all happening at a time when there was this whole
narrative.
Narrative about India becoming the China +1.
Yeah, China +1. That was the buzzword.
So for those of you who
haven't heard that,
aren't familiar with that phrase, it basically means that
it's all about
a lot of global companies want to diversify their production.
Yeah. They don't want to put all their eggs in one basket.
Right, exactly. They don't want to be completely reliant on China.
Right, exactly.
So they're looking for other places to manufacture their goods.
Right.
And India was seen as like
Yeah, prime real estate.
the next big thing.
Yeah, it's a place to be.
But these tariffs,
Yeah, they kind of throw a wrench in that.
they throw a wrench in the whole thing.
Yeah.
They create so much uncertainty
Oh, yeah.
for those companies
Huge uncertainty.
who are trying to make these really important
Yeah,
long-term investment decisions.
huge decisions.
And this is where things start to get
Oh, yeah.
really interesting.
This is where it gets fun.
Because there's this whole chain reaction
Oh, yeah.
that gets set off.
Yeah.
And it all starts with inflation.
Yeah, inflation is the big one.
So
So let's talk about that.
yeah.
When we look at global trade, right?
Yeah.
Any disruption, any snag,
Anything that slows things down
anything that slows things down.
or creates uncertainty, it
Sure.
tends to push up costs.
Drive those costs up.
And for India,
Yeah.
one of the biggest worries that our sources highlight
Hmm.
is the rising cost of imports,
Oh, yeah.
especially for those like
Right.
really important raw materials
Raw materials are key.
and intermediate goods.
Yeah, those building blocks.
Yeah, the building blocks
Yeah,
that are essential for their manufacturing sector.
totally. They need that stuff to make things.
So we're talking about things like
Like what kind of stuff?
semiconductor chips.
Oh, yeah. Those are huge right now.
Right, which are needed for electronics,
Everything needs those.
cars, everything.
Yeah, your phone, your computer, your car.
And then chemicals.
Chemicals are huge, too.
Yeah, which go into
Yes.
all sorts of things.
Everything.
Pharmaceuticals, textiles. Yeah, you name it.
So basically,
Yeah.
Indian manufacturers are now in a situation where
Okay.
the essential ingredients for their products
Yeah, their inputs,
are more expensive.
yeah, way more expensive.
And that puts a real squeeze
Oh, yeah.
on their profit margins.
Yeah, they can't make as much money.
And ultimately,
Yeah.
that contributes to
The big one.
rising consumer prices.
And inflation.
Yeah, inflation.
That's what we're seeing.
And you all are probably
Yeah.
feeling that
In your wallet.
in your everyday lives.
At the grocery store, yeah.
And this puts the Reserve Bank of India
The RBI, yeah.
in a really tough spot.
Oh, yeah. They're in a bind.
They're trying to figure out
Yeah.
how to support growth.
They want to keep things moving.
Yeah, they don't want the economy to stall,
Right?
but they also have to manage inflation.
But you can't let prices go crazy.
Right.
It's like,
It's like driving a car
yeah,
with one foot on the gas
on the gas.
and the other hovering over the brake. Yeah, ready to slam on the brakes.
Exactly.
That's the RBI right now.
So it's this delicate balancing act.
It is.
And it really raises the question.
Yeah, what's the right move?
What's the right move?
How do they navigate this?
Yeah, how can they possibly stimulate the economy
Keep things growing.
without letting prices spiral out of control?
Yeah, without making inflation worse.
Right,
That's the million-dollar question.
exactly. And then there's the whole
Oh, yeah.
knock-on effect on the Indian rupee.
Yeah, the currency.
The currency. It's all connected.
So our sources suggest that
Yeah.
with lower earnings from exports,
Less money coming in
yeah,
and maybe a bit of a
yes.
risk-off mood
Risk on.
among those big foreign investors.
The FIIs.
Yeah, the FIIs.
We could see the rupee
Yeah.
losing value.
Depreciating, weakening.
Yeah, weakening.
Yeah.
And what's really interesting here
Oh, yeah.
is the potential for
Yeah.
what's called capital flight.
Yeah. Money leaving the country. Yeah. Investors pulling their money out.
Yeah, because they're scared.
And this could especially impact those
Yeah.
mid-sized manufacturing and tech companies
Right.
that have a lot of business tied to the U.S.
Yeah, those companies with a lot of exposure to the U.S.,
Exactly.
they're going to feel it.
Because those foreign institutional investors,
Those FIIs. Yeah.
they want stability.
They want predictability.
Want to know what's going to happen.
Yeah. They don't like surprises,
Exactly.
especially not bad surprises.
So when they see all this uncertainty
With the tariffs and everything.
with the tariffs,
Yeah.
they might say, yeah, it's time to get out.
You know what? It's too risky.
We're out of here.
We're pulling our money out.
Yeah, they sell off their assets.
And that's what we call a risk-off approach.
Risk off. It's
Yeah.
all about minimizing risk,
But it's not all bad news.
right? There's always two sides to the coin.
Right, because a weaker rupee
Yeah.
could actually make Indian exports
Yeah.
more competitive, more attractive to buyers.
Yeah, because it'll be cheaper.
Exactly cheaper on the global market.
So that could provide a bit of a cushion
A little bit of a buffer
for exporters.
to help them weather the storm.
But there's always a...
There's always a catch.
Yeah.
India is a huge importer of oil,
Oh, yeah. They need a lot of oil.
and a weaker rupee
Makes that oil more expensive.
makes it way more expensive.
Yeah, that's not good.
And it also makes it more expensive
Oh, yeah.
to repay any debts.
Any debts that are in other currencies.
Yeah, they're denominated in other currencies.
Yeah, dollars, euros, whatever.
So it's really this double-edged sword.
Yeah, it cuts both ways.
And it really highlights
It does.
how interconnected
Yeah.
all of these economic factors are.
It's a web.
Like one little change
Yeah, one little tweak
could have ripple effects
throughout the whole system.
throughout the whole economy.
Yeah, it's amazing.
Affecting everything.
Yeah.
From the value of your currency
Well, money in your pocket to the nation's debt.
to the big picture stuff.
So how is the Indian government responding to all of this?
That's the big question.
What are they doing?
What are they going to do?
So our analysis suggests a two-pronged approach.
Okay, a two-pronged approach.
So on the one hand,
Yeah.
they're ramping up
Oh, yeah.
their diplomatic engagement with the U.S.
They're hitting the phones.
They're hitting the phones. They're scheduling meetings.
Yeah, they're going all out.
They're trying to get those direct trade talks
Yeah, bilateral talks.
back on track.
Get those going again.
And they're also really pushing for
Yeah.
exemptions in key sectors.
They need some relief.
They need some relief
Yeah.
from these tariffs.
Yeah.
So specifically, our sources mention
Yeah, like what sectors?
agriculture,
Agriculture is huge.
food products,
Yeah, it's important.
and pharmaceuticals.
Yeah, pharmaceuticals are big for India.
They're really lobbying hard
They need those exemptions.
for exemptions in those areas. And of course, the long-term goal
The holy grail.
is a comprehensive
Yeah,
bilateral trade
a
agreement
big fancy agreement.
with the U.S.
Yeah, that's the ultimate goal.
But it's not going to be easy
No, it's not a walk in the park.
because the U.S.
Yeah.
has their own demands.
They want things too.
They want things too.
It's a negotiation.
And they've been pretty clear about
Yeah, what are they asking for?
what they want.
Mhm.
They want greater access to the Indian market
Yeah, they want to sell their stuff in India.
for their products,
Yeah.
especially American dairy products.
Oh, yeah, the dairy industry is a big one.
Agricultural goods in general.
Yeah, American farmers want a piece of the pie.
And medical devices.
Yeah, medical devices are huge too.
And they're also pushing for
Yeah.
stronger enforcement
Of intellectual property rights?
of IPR in India.
Yeah, that's a big one.
And these are all
Mm.
really politically sensitive areas for India
Oh, yeah. This is tricky.
because there's a lot of domestic opposition
Yeah, a lot of people in India are against this.
to opening up these sectors,
Yeah, they don't want foreign competition.
foreign competition.
They want to protect their own industries.
So India's in this tough position
You're walking a tightrope.
where they're trying to get tariff relief from
Yeah.
the U.S.
Yeah.
But they're also facing pressure
Yeah.
to make concessions.
Yeah, to give something in return.
That could be really unpopular
Yeah, could cause problems back home.
back home.
Yeah, politically it's a minefield.
And on the domestic policy front,
Okay, so what are they doing internally?
what are they doing within India?
Yeah.
Our sources suggest a few things they might do.
Okay, lay it on me.
So they might increase export subsidies
Okay, so help the exporters.
to help exporters kind of absorb
Yeah.
some of that tariff pain.
Yeah, ease the burden a little bit.
And they might expand
Okay,
the production-linked incentive schemes.
the PLI schemes, yeah.
So those are designed to
Yeah, they're meant to boost,
domestic manufacturing
yeah, make more stuff in India.
and reduce their reliance on exports.
Yeah, so they're not so dependent on other countries.
Exactly.
Yeah, that makes sense.
And they might also increase the availability of export credit.
Okay, so more financial support.
More financial support for exporters.
Yeah, so they can keep going.
Yeah, to help them weather the storm.
Yeah, that's crucial.
But
There's always a catch.
yeah, what's the catch?
The big constraint here
Yeah, what's holding them back?
is the government budget.
Oh, yeah, money's always the issue.
Money is always the issue.
Yeah.
They already have
Yeah, they got a lot of commitments.
huge commitments to social programs,
Yeah, healthcare, education.
infrastructure projects.
Yeah, building roads, bridges, all that.
So finding the money
Yeah.
to implement all these support measures
Yeah, on a large scale.
is going to be really challenging.
Yeah, they're going to have to make some tough choices.
Exactly. Yeah, it's a juggling act.
It's a balancing act on all fronts.
For sure.
And speaking of balancing acts,
Oh, yeah.
let's talk about
Yeah.
India's position on the global stage.
Yeah. This is where it gets interesting.
Because they're really trying to walk this
This tightrope.
tightrope
Yeah.
between seeking relief
Yeah. They need help with those tariffs.
from those U.S. tariffs
Yeah.
and maintaining their image
Yeah. As a leader,
as a leader in the global South,
the champion of the global South.
championing fair trade
Yeah. They're all about fairness and multilateralism.
and multilateralism.
Yeah. They believe in working together,
Exactly.
not just doing deals with one country.
So if they appear too eager
Yeah, to appease the U.S.
To appease the U.S.
Yeah, like they're giving in.
Like they're just giving in.
Yeah.
The risk.
Yeah, they could alienate
Alienating other countries.
other important partners.
Other key partners.
Yeah, they've got other friends.
Like the EU.
The EU's a big one.
ASEAN nations.
Yeah, those Southeast Asian countries.
Countries in Africa.
Yeah, they got a lot of ties.
They can't afford to just
No,
throw all those relationships away.
no, they need to keep everyone happy.
Exactly.
It's a delicate balancing act.
It's like juggling multiple balls in the air.
So many balls, so little time.
And this whole situation has really
Yes,
highlighted some of India's vulnerability.
Yeah, they're not as strong as they thought they were.
Especially their reliance.
Their dependence on.
And a few key export markets.
Yeah, they're putting all their eggs in a few baskets.
Exactly.
And that's risky.
And that's risky.
Yeah.
So there's this renewed discussion.
Yeah, people are talking about
the need for diversification.
Yeah, finding new markets.
And boosting domestic consumption.
Yeah, selling more stuff within India.
So they're not so reliant.
Yeah, on exports.
On those few export markets.
Exactly.
But it's not all doom and gloom.
Right. There's always a silver lining.
Our analysis also points to
Yeah.
some potential silver linings
Okay, let's hear it.
that could come out of this.
Yeah, some good stuff.
So the suddenness of these tariffs
Yeah, it was just shocking.
could actually act as a
Yeah,
catalyst,
a wake-up call.
a wake-up call
Yeah.
to force India to reevaluate some of its weaknesses
It's structural bottlenecks.
in its trade infrastructure.
Yeah, the systems that support trade.
Exactly.
Yeah, they need to upgrade those.
And this could create a real sense of urgency
Yeah, a fire under their butts.
to finally diversify
Yeah, find those new markets.
those export markets
Yeah.
and to push through some of those
Yeah, those long-delayed.
long-delayed improvements.
Yeah, those things they've been putting off.
in things like customs procedures,
Yeah, make it easier to get goods in and out of the country.
regulatory compliance.
Yeah, make sure everyone's following the rules.
Logistics networks.
Yeah, make sure the trains run on time.
Make it easier to move goods around.
Yeah, all that stuff.
And this also creates a big opportunity for India
Yeah.
to engage with
Yeah.
regions like Africa and Latin America.
Yeah, those are huge growth markets.
Which haven't been
Yeah, they haven't been a priority,
a top priority.
but maybe they should be.
But they offer
Yeah.
huge long-term growth potential.
Yeah, those regions are on the rise.
And they're less susceptible
Yeah.
to the political whims
Yeah, the political winds.
of the major economic powers
Yeah,
there.
they're a little more independent.
So what we're seeing is this
Yeah.
potential shift
A shift in thinking.
in India's external economic policy.
Yeah, they're becoming more,
Moving from a
Yeah.
reactive stance
just responding to things.
to a more proactive
Yeah.
and assertive approach.
Yeah, they're taking control.
Exactly.
They're not just waiting around.
They're not waiting for things to happen to them.
Yeah, they're making things happen.
They're shaping the agenda.
Yeah.
They're writing the rules.
And this goes beyond just,
the bilateral relationship
it's not just about the U.S.
with the U.S.
It's about the whole world.
It's about a strategic realignment.
Yeah, a big picture shift.
So we're seeing
Right.
real determination
Yeah.
to finalize and
Yeah.
implement those
Those free trade agreements
free trade agreements.
with the UAE and Australia.
Yeah, those are moving forward.
And they're trying to accelerate
Yeah, speed up those negotiations.
those negotiations
Yeah.
with the EU and the UK.
Yeah, those are big players.
And they're even reopening talks
Yeah, why not?
with the GCC
The Gulf Cooperation Council.
and Mercosur.
That South American bloc.
And it's not just about bilateral deals.
It's about more than that.
They're also reassessing
Yeah.
their involvement with
Yeah.
all sorts of
Multilateral and regional.
multilateral and regional institutions.
Yeah, those big organizations.
So there's talk of
Yeah.
reevaluating their position
Yeah.
on RCE, the Regional Comprehensive Economic Partnership,
They're taking another look at IPF.
the Indo-Pacific Economic Framework.
And they're more active than BRICS.
BRICS, yeah, that's a big one.
And
The Shanghai Cooperation Organization.
it's important to see this as
Yeah.
a way of hedging their risks.
Yeah, not putting all their eggs in one basket.
Not choosing one geopolitical bloc
Right.
over another.
It's about being flexible.
It's about creating a more balanced
Yeah.
and resilient network
Yeah.
of economic partnership.
Partnerships all over the world.
And India also has this opportunity
To be a leader.
be a leader
Yeah.
on the issue of global trade equity.
Yeah, they can really make a difference.
So they can use their influence
Yeah, as a leader in the global south.
in the global south
Yeah.
to advocate for reforms
Yeah, within the WTO.
within the WTO
Yeah, the World Trade Organization.
to protect developing countries
Yeah, from these trade wars.
from these tariff wars
Yeah.
started by the bigger economies.
Yeah, the big guys throwing their weight around.
And they can push for
Yeah.
stronger dispute resolution mechanisms.
Yeah. So there's a fair way to settle disagreements.
And greater protections.
Yeah.
For emerging markets.
Yeah. Those countries that are still developing.
And they can really frame
Yeah.
these Trump tariffs
Yeah.
as a cautionary tale.
Yeah. A warning to the rest of the world.
For the whole world.
Yeah. This is what happens when you don't play fair.
And domestically.
Okay, so what about within India?
Within India, there's this need to
Yeah.
bolster their
Yeah.
economic strength and
Yeah.
resilience.
They need to toughen up.
So it's not about turning inward
Yeah.
and becoming isolated,
Yeah, they still need to trade.
but it's about preparing
Yeah.
for a world
Yeah.
where trade disruptions
Yeah. Those disruptions are going to happen.
are going to happen.
More and more.
Yeah, more frequently.
Yeah.
So this means investing in logistics infrastructure,
Yeah.
expanding digital customs systems,
Yeah, making things more efficient.
and implementing trade facilitation measures.
Yeah, making it easier to do business.
And we're also likely to see more incentives for companies
Yeah.
to target those newer markets.
Yeah, those emerging markets.
Like Latin America, Africa, Central Asia,
Yeah.
maybe through tax breaks
Yeah.
and marketing support.
Yeah. Helping them get a foothold in those markets.
So
Yeah.
the big takeaway here
Yeah, what does it all mean?
is that these Trump-era tariffs
Yeah.
are definitely disruptive.
Oh, yeah, they're shaking things up.
They're going to slow growth.
Yeah.
They're going to strain resources.
Yeah, the government's going to have to work hard.
But they're probably not going to
Yeah.
derail India's
Yeah.
long-term economic trajectory.
They're not going to break India.
No.
India's going to be fine.
They might actually be
Yeah.
a turning point.
A catalyst for change.
A catalyst for positive change.
Yeah, they could make India stronger.
Because they're forcing India
Yeah.
to confront its vulnerabilities,
Yeah.
to diversify its trade relationships,
Yeah.
and to create
Yeah.
a more resilient, adaptive.
All right, so, everybody wants to stay on top of things, right? Like the really big global stuff, the kind of things that could end up, impacting all of us. But who has the time to wade through all those endless news cycles? You know what I mean?
Oh, yeah, absolutely. It's tough to cut through all the noise and really get to what matters.
Right. So that's what we're here for. Today, we're going to really zoom in on something big, something that's already playing out and could have pretty major ripple effects globally. We're talking about how China is reacting, in real time to these brand new trade tariffs that the U.S. just slapped on them.
Yeah.
Trump's administration.
Yep, exactly. And we've been digging deep into the analysis, trying to sort of peel back the layers and figure out what China's game plan is here. And it's not just about tariffs. They're pulling some pretty interesting levers, targeting specific companies and flexing their control over crucial resources.
Okay, so this is what I want to know. What are the actual nuts and bolts of China's response? Like, how are they actually pushing back? And what could this all mean, down the line? Especially for the U.S. tech industry. And that's something that touches all of us, right? And the global economy as a whole.
Okay, so right out of the gate, China has come out swinging. They've announced a new tariff, and this is a big one, a 34% tariff on every single thing the U.S. imports to China. And this is kicking in really soon, April 10th at 12:01 p.m. So yeah, a blanket tariff like that is going to hit a ton of American products going into that market.
Wow, a 34% hike on literally everything coming in. That's huge. Okay, so what else are they doing?
Well, on top of that, across the board tariff, they're also getting more surgical, shall we say? Their customs authorities have already moved to stop giving out import licenses for products from 6 U.S. companies, so that's a direct hit right there. It's like cutting those businesses off from, think about it, the Chinese market is enormous.
Right. Yeah, targeted strikes against specific players.
Yeah.
I think I read something, too, about certain minerals. Something super vital for all the tech we use today. What was that about?
Ah, yeah, this is where things get really strategic. So, China has decided to put export controls on a handful of rare earth minerals: samarium, gadolinium, terbium, dysprosium, lutetium, scandium, and yttrium. I know they sound like something out of a sci-fi movie.
Right.
But the real story here is how much of a grip China has on these things globally. They control something like 67% of the world's supply.
2/3. That's incredible. Why are these minerals so important?
Well, they're absolutely essential for U.S. defense and for a whole lot of tech industries. They've got these unique properties, that make them critical components in everything. You're talking about advanced weapon systems, the magnets in electric cars and wind turbines, even the stuff that makes our screens glow. They're used as catalysts in all sorts of industrial processes, too. So yeah, by controlling the export of these things, China basically has a ton of leverage.
Okay, let's get down to brass tacks here. What could this mean for people in the U.S., specifically for tech and for us, the consumers? The analysis we read had this really interesting example about iPhones. Can you walk us through that?
Sure. So they're saying we could see a big price jump for the iPhone 16 Pro, the 256 GB model. Because of these U.S. tariffs, the ones that are supposed to kick in on April 9th, 2025, the price could shoot up to, get this, around $846. I mean, right now they're selling for $549.
Almost $300 more. What's causing that kind of a jump?
It all comes back to how interconnected things are. Even a classic American product like an iPhone, well, the parts come from all over Asia, often from places where it's just cheaper to make things. If you break down the cost of all the parts in an iPhone 16 Pro, it's pretty eye-opening. So the processor that's made in Taiwan costs about $90. The display, South Korea, $37. The battery, made in China, just $4. And then the storage, that comes from Japan, about $20.
So the tariffs that the U.S. is putting on all these countries, those are basically getting added on to the cost of every single piece.
Exactly. And the extra cost from these tariffs, well, it's estimated to be about $296 for just those parts alone. And that cost, well, somebody's got to pay for it, right? So the tech companies, they'll probably raise prices to cover some of that. And as you can imagine, that's going to feed right into the inflation we're already seeing.
So we could be looking at pricier electronics across the board.
Right.
Got it. Now, I want to get into what some of the experts are saying about all of this. The source material we have quotes this guy, Dan Ives. He's a tech analyst on Wall Street. What does he think about these Trump tariffs?
Well, Dan Ives doesn't mince words. He calls these tariffs a black swan event for U.S. tech. Now, a black swan event, that's something totally unexpected that has a huge impact. And you only really understand it after it's already happened. So Ives thinks these tariffs fit that description perfectly for U.S. tech. He's basically saying they could set the U.S. tech world back a decade. And at the same time, create all these opportunities for China.
A decade? That's a scary thought. Why is he so worried?
His main thing is this. He says that for the first time in a long time, like 30 years, the U.S. has finally gotten ahead of China in some really key areas, things like artificial intelligence, what they're calling the fourth industrial revolution. AI, automation, data science, all that.
Yeah.
And he specifically mentions companies like NVIDIA, Microsoft, OpenAI, Amazon, Alphabet, Palantir, Oracle, Tesla. All these companies are leading the charge. But Ives is worried that these tariffs, if they stay as high as they are, they're going to totally mess up the supply chains that are already in place, make production costs skyrocket, create a bunch of uncertainty that'll delay investments, and basically slow down U.S. tech innovation big time.
So he sees this as a direct threat to American dominance in these crucial emerging technologies. What about this whole Made in America thing, bringing manufacturing back to the U.S.? Does he think that's a realistic solution?
He's super skeptical about how quickly we could actually move manufacturing back to the U.S. on a large scale. I mean, just think about it. Building factories here, that takes time. He figures 4 to 5 years just to get a big factory up and running. On top of that, he says the cost of labor and just the overall cost of doing business here is way different from Asia. That's where most of our tech manufacturing is happening right now. And then there's the intellectual property, all the specialized knowledge that's already embedded in those Asian ecosystems. So basically, Made in America sounds good on paper, but Ives thinks the short-term disruption and the economic pain would be massive, and it would take at least a decade to really see a difference.
Man, that's not a pretty picture for the future of U.S. tech.
Yeah.
So what does he think is going to happen long-term if these tariffs stick around?
He says that higher costs are basically going to put U.S. tech companies at a big disadvantage. It'll be really hard for them to compete with Chinese companies. He specifically mentions BYD and electric vehicles, Huawei and telecom, and those e-commerce giants, Alibaba and Tencent. Those are companies that could actually gain more global market share if this keeps up.
Didn't he even give a percentage for how much more we might end up paying for our electronics?
Yeah, he's predicting a price increase of 40% to 50% for pretty much all electronics. And he gives this example. Imagine an iPhone made entirely in the U.S. That could cost something like $3,500. I mean, they're about $1,000 now. And he's really worried that these price hikes are going to slow down the whole AI revolution. People just won't be able to afford the tech.
He really didn't hold back. He even used the phrase economic Armageddon at one point. Why is he so concerned about that?
His biggest fear is that we're going to see retaliatory tariffs. China and maybe other countries putting their own tariffs on U.S. goods in response. And he thinks this could spiral into a global economic crisis. And in the end, the U.S. loses all the technological ground it's gained. He sees these tariffs as a huge global policy mistake that could jeopardize everything good that's happening in U.S. tech.
Okay, so beyond these tariffs, what other ways is China fighting back? What else are they doing?
Well, they're also taking more direct action against specific companies. They've added 11 U.S. entities to their list of unreliable entities, and that can come with all sorts of penalties and restrictions, makes it harder for them to do business in China. And then they've slapped another 16 U.S. entities on their export control list, which basically makes it even harder to trade with China. And then there's this move that involves India, too. China's launched an anti-dumping investigation into medical CT bulbs imported from both the U.S. and India.
It sounds like they're really hitting back from all angles, not just with tariffs. The analysis we looked at also talks about the bigger geopolitical picture, the whole context surrounding this trade war.
Right.
What's the main argument there?
The main point is that China's not in the same position it was 10 years ago. Their global economic and technological power has grown a lot. They're not just reacting anymore, they're acting from a position of strength. The analysis even suggests that China might be banking on a recession in the U.S. under the current administration, a Trump recession. And they're hoping that'll hurt the Republicans in the next election and weaken the U.S.'s position overall. And it's not just China. Europe is apparently thinking about its own countermeasures, too, specifically targeting American tech companies.
And the analysis really highlights China's rise as this tech and industrial powerhouse. What's the evidence for that?
Well, they call it a techno-industrial power, and they point to a bunch of things that China's doing. Things like the digital Silk Road, the rollout of the digital yuan, setting up the Asian Infrastructure Investment Bank, the AIIB, and developing their own payment system, the CIPS. They're basically trying to build their own global financial and technological infrastructure as an alternative to the Western-dominated systems. And on top of that, they're pouring money into open-source AI models and making huge progress in semiconductor manufacturing. That's an area where the U.S. has always had the edge.
So the world has changed, and the U.S. needs to wake up to that. What's the alternative to these unilateral tariffs? What does the analysis suggest?
They're really pushing back against this protectionism idea. They say it's not a good long-term strategy. Instead, they're talking about ally shoring. Basically, working more closely with allied countries, especially in the Indo-Pacific region, to build more reliable and secure supply chains. They're worried that the U.S. is going to come across as an unreliable partner by doing this whole tariff thing alone. And that could give China a chance to increase its global influence and maybe even weaken our alliances.
And how do they think this American go-it-alone approach is playing with other big players like India and Russia?
Well, the analysis suggests that countries like India and Russia might start to wonder if they can really count on the U.S. as a stable trade partner in the long run. They might get the impression that the U.S. is only looking out for itself, even if it hurts its allies. And that could push them towards a more multipolar world where the U.S. doesn't have all the power.
This is all really fascinating. The analysis also focuses specifically on how this is all going to impact India. How is India likely to be affected by this escalating U.S.-China trade war?
They say that this whole thing, it started as a trade dispute between the U.S. and China, but it's quickly becoming a global issue that could have a big impact on the Indian economy. They even call it a strategic moment of truth for India.
So what does India need to do? It sounds like they're in a tricky position.
Yeah, they're definitely walking a tightrope. The analysis says they need to avoid doing things that could hurt their own economy, like retaliatory tariffs. But at the same time, they can't just cave in to whatever the U.S. wants in a trade deal. The worry is that the U.S. might try to pressure India into giving up more than just tariffs, things that could hurt important sectors like food security, agriculture, and intellectual property. So what should India do? They suggest focusing on building up their own industries and manufacturing with incentives and subsidies, and at the same time, carefully negotiating with the U.S. on these tariffs, maybe hoping for a better deal if the U.S. economy takes a downturn.
What about the bigger picture? What are the economic risks for India and for everyone else from all this trade conflict?
Well, the analysis points to a few major risks. First, slower global economic growth because of all the disruptions and uncertainty. Second, inflation could come back because of supply chain problems and the higher tariffs. And third, if things really get out of control, we could even see a global recession, like what happened in the 1930s.
And there's also this concern about what both the U.S. and China ultimately want for India's manufacturing sector, right?
Yeah. They bring up a point that's a little uncomfortable. Neither the U.S. nor China really wants India to become this huge manufacturing power in Asia, the kind that could compete with them directly. The U.S. might try to limit India's growth in areas like pharmaceuticals, electronics, and semiconductors, and China might try to stay in control by making it hard for India to get the raw materials and specialized equipment they need for manufacturing. The worry is that these U.S. tariffs could actually end up making India more dependent on American companies, almost like a trade colony.
So this could actually hurt India's goal of becoming a major manufacturing hub. And that was something they talked about even within the CONUAD, right?
Exactly. The whole idea behind things like the QA Day was to make global supply chains more diverse and less risky, with India playing a big role in that. But these protectionist moves by the U.S., they're seen as a step backwards. It could undermine agreements like the Mineral Security Partnership and basically take us back to the bad old days of protectionism.
So it's not all doom and gloom, though, right? The analysis also talks about some lessons that India can learn from this and some opportunities that might come up. What are the main takeaways for India?
There are a few big lessons here. First, don't put all your eggs in one basket. India needs to diversify its export markets and focus on making more high-tech, higher-value products. Second, competing just on low labor costs. That's not sustainable in the long run. They need to move up the value chain by innovating and improving quality. And third, diplomacy and trade. They go hand in hand. India needs to use its relationships with other countries strategically to get better trade deals and protect its economic interests.
And what about opportunities? What could India gain from all this global economic upheaval?
The analysis suggests that we might be at a turning point, maybe even what they call an inversion of globalization. Instead of just having completely open trade, the focus might shift towards strategically managing trade relationships, where security and trust are just as important as efficiency. And in this new world order, India could become a real economic force, not just as a replacement for China, but as a leader in things like innovation, sustainability, and balanced growth. But to do that, they need to invest heavily in education, infrastructure, and strong institutions. And they need to start treating trade as a core part of their national strategy.
So even with all the disruption from these U.S. tariffs, there could be a silver lining for India if they play their cards right.
That's the idea. The tariffs might be painful in the short term, but they could force some much-needed economic reforms, help India develop its industries faster, and ultimately open up new possibilities for them to control their own economic future. And maybe even push for a fairer global trade system, especially for countries in the global south.
So let's wrap this up. What are the absolute key things we should take away from this whole deep dive into China's response to these U.S. trade tariffs?
The main takeaways are pretty huge. China has hit back hard and fast. We're seeing broad tariffs, targeted actions against specific companies, and strategic control over those rare earth minerals. This could really shake up the U.S. tech industry, lead to higher prices for consumers, and maybe even slow down technological progress. And beyond the economic impact, there's the geopolitical side of things. This shows how much China's global influence has grown, and it raises questions about whether the U.S. can really go it alone on trade. And for India, this is a really complex situation. They've got challenges and opportunities, all while the global economy is going through these major changes.
So hopefully now you, our listener, have a much better grasp on all the different forces at play here. This isn't just about abstract policies. It's about real actions that could impact our everyday lives and the global economy in a big way.
Definitely. You've gone beyond just the headlines, and you can see how interconnected and complex international trade and geopolitics really are.
And that brings us to our final thought for you to ponder. We've talked a lot about how this is going to impact the tech world, but think about this. How might these trade tensions end up changing other industries that you're involved in or interested in? I mean, the global economy is so interconnected. What are the long-term consequences? What are some of the unexpected things that might happen? It's definitely something to keep an eye on.